Alright everyone, here we are with another video with Invest for Tomorrow. And to all the first time viewers and investors, welcome to the channel, and to all the subscribers, welcome back. All I ask for in return is for you to smash that like button to let me know you watch this video. It helps out the YouTube channel and it lets me know that you appreciate the time and effort I put into making these videos. Now, after this chart analysis, right after Sensonics, we're going to talk about a ticker symbol I want you guys to add to your watch list. It's moved up already $7 since I mentioned it. It's a strong foundational company. I mean, multi-billion-dollar company with a large market cap. This is not a mid-cap or anything like that. Has a lot of room to grow, and it's been ever growing. We're going to look at its chart. I'm also going to share with you guys some of the stocks I briefed on this morning that had momentum. We're going to look at them right after this. So, SENS Stock, Sensonics Holdings Inc. has actually been in a sideways movement. So, SENS Stock has to actually continue consolidating to show strength. As long as Sensonics shows strength, it's a good sign. I know a lot of people are saying, well, Sensonics isn't doing anything, it's not really moving, and Sensonics is kind of done, there's nothing going for it, this stock already ran. A lot of investors, and I always talk about this, I want investors to understand this, and that's another thing that's beneficial of joining the Patreon, because in the stock market and emotional intelligence series, I'm going to be talking about all these things in more depth. So if that's something you have not checked out, you can click on the link down below to check out the tiers. They've been filling up pretty quickly and the opportunities are there. So here we are with Sensonics moving upwards. You got to remember where it came from. It's not really completely destroyed. It's actually above the point where it started, above $1 and above one of the lowest points we recently hit at 191. I think that as long as this stays above $2, there's some strength at this area. There's strength. Now this stock did run up pretty big, hit the $5 and some change mark, and it's just been falling. But Sensonics is a stock that, if you think about it in the bigger picture of things, this same chart is going to draw itself out. Something similar to it. I'm not saying it's going to peak up and then fall down. But this same chart with this movement like this is going to draw itself out here in the future. If you look at all this empty space and you actually draw something out, it can actually turn out to do something like that, come back down, and then actually consolidate again until the next upward movement. And when you actually zoom out, you could see it coming from these points here, working its way up to a newer high, then it came back down, and then it's going to go ahead and spike back up to another high as it continues to draw itself out. And I know this drawing is terrible, but just to give you guys an example of how the move is going to continue sometime in the future. And the longer it stays at these levels, if you're a long-term investor, you got to think of it this way. You got to do your research. You got to understand the company before you say how you truly feel about the company, because you either got in a little bit too high or you missed it, right? Those are the two ways that someone says, a stock is done, and so forth. If this stock went back down close to $1 or below it, I would say, okay, this stock is done. But right now, sitting at $2, the move is there. The room for it to go upside is there. And if you think about it long term, there's opportunity here if you've done your research. Now, I'm not here to tell you guys to buy, sell, or hold any positions. I'm not giving out financial advice. But the one thing I want you to be aware of is institutional investors can load up millions of dollars in one shot, and they don't come back and buy again unless they really like the stock. They just buy one time and leave it there. And the point is for it to multiply 5x, 10x, maybe 50x, right? That's usually their goal. And when you're a retail investor with not millions of dollars and only able to buy hundreds at a time or thousands at a time, depending on how big you roll, you want these prices to stay as low as they can for as long as they can, so that every single paycheck you could say this amount is going towards SENS stock, Sensonics stock. I'm putting this amount towards that. And the longer it stays at these levels, the more opportunities you can buy the dips, or you can buy every single time it's moving a little bit lower, and you ride it as it goes up, and as it goes back down, you buy again, because at some point The goal is, if you've done your research and you like the company, that these prices here are no longer going to exist, and tomorrow's existing prices are all the way up here, right? That's the whole point of investing. And when you're a retail investor with not a lot of money, I would tell you that you should be glad that certain prices are where they're at of certain stocks. But the thing is, we want instant gratification. It doesn't work that way. Now, is there risk with Senseonics stock? Yes, there's risk all over the market. If you don't want as much risk, go into index funds or go ahead and buy blue chip stocks that move very, very slow, and it'll take years for your money to actually grow, or it could take a few months for it to do something. But in these type of plays with a penny stock, a stock below $5, right, doesn't even reach 1 billion, barely. Yes, there's risk, and high risk, high reward. And the other part that people don't usually say that I like to say is high risk, high losses. But you need to be aware of what it is that you're doing and why you're doing it. I think this stock, if it really scores and it starts taking a market share, because I did a full thorough analysis of its sector with the continuous glucose monitor, getting the FDA approval, which is the biggest catalyst we're waiting on. I think Sensonics, over time, revenue through revenue, with such a small market cap, to grow on the upside, if things go as planned, yes, this could grow tremendously, as I always say. So let's look at this. So the 50-day moving average is 257. Anything below it is bearish. Anything above it is bullish. Our highest point was up here at 267. That was a nice run for the day. But our resistance level right here is 263. And that needs to be broken through by the bulls to continue the momentum, pull away from the 50-day moving average, and go into bullish territory. Now our support, if the bulls lose traction, is way down here at this point, and that's 251. That means that the bulls have lost traction, the bears have brought it into bearish territory, and they're pulling it downwards, and it's broken through the 50-day moving average. But before waiting to the 50-day moving average getting broken through of 257 and way down here at 252, I would use this point, and this is optional, 259, to see how the stock is doing between 259 and 257 to see if the bulls have reappeared to bring it back up, or are the bears tearing this one down fairly fast. If you learned something new, don't forget to subscribe. Click on the bell so you don't miss a single video that I post. Share this with your friends and community. And don't forget to smash that like button to let me know you watch this video. It helps out the YouTube channel. And let's get right into it with these stocks that I briefed on this morning. They moved up 10%, almost 50%. Another one. And the ticker symbol you want to add to your watch list. The ticker symbol I want you guys to add to your watch list is a very big company. They did a stock split and they've gone up $7 since I mentioned it. It's a slow mover, but definitely one to watch. I think it still has some more upside. But before we jump into it, here we have on the screen a chart to one of the stocks I briefed on this morning. If this is something that interests you, you can definitely join me and the other investors over at the Patreon and Discord. And there's some very bright, smart investors over there, learning investors, beginning investors, and even experienced investors. Very privileged to have them all over at the Patreon, and we're looking forward to you joining us as well. So right here, it was sitting at 160 when I briefed on it. So let's go ahead and look here, the time frame that I went ahead and mentioned it. It was 8:46 a.m. SFET has jumped and has news coming out that they're approved vendor for NASA Solutions. Interesting one. It is at 160. Volume is picking up too. So literally right there is 8:46. 8:47 is the timestamp, and it was sitting at 160. And it's kind of funny that it ended the day post-market at 160. That was like probably the support / resistance of the whole day. But from that point forward, it jumped up and it hit 178. That right there was a 10 to 12% gain. We're looking for 5 to 10% every single morning, and that's it. No more. We're not greedy. We just want our 5 to 10%. Anything beyond 10%, I call it a home run. Anywhere between 10 to 15 is pretty reasonable, but anything beyond 15, 20, that's a home run. And this one was pretty close of a home run at 12% gain, right? But I'm just rounding it down to 10%. It was 2 cents away from 10%. So this one right here definitely ran up pretty fast, and that was within minutes. If you look at the timestamp here, 8:47, all the way up to the peak here at 8:52 in just A few minutes. Now, another one which was very interesting, no pun intended, and the ticker symbol is very. I talked about it at 8:11, and we could see the timestamp here, and it was right here, 8:11. Very just pulled back and touched $14. One to watch, especially with this kind of volume. Already ran once this morning, and it has been pulling down. So this one close to 8:11. It had hit a low here, right here around this time. You could see it here around this time. It was starting to fall, and it hit a low here of about $14. All right, a few minutes after that, and it bounced up to 14 and some change, fell back down to 13 and some change, and bounced up to 15. So this one gave close to 10% if you just waited a few minutes. This one took almost 30 minutes. Now it pulled back, and once the market opened, right, it hit a low of 14.17, and it shot up right away to 20.64 and hitting a high of $21 in just a matter of an hour. Okay, this was a big home run. This was almost 50% jump within an hour, and I told you guys that 5 to 10% is what we're looking for. This was a big play here, and it was kind of just sitting sideways, and it took off. So if you're interested in opportunities like this one, definitely join us over at the Patreon. So here we are with the ticker symbol. I want you guys to add to your watch list, and we're going to see when I mentioned it. And by the way, the links are down below. I didn't mention that. The links are down below for the Discord and Patreon. So NextEra Energy, NEE. Let's go ahead and put this on the 30-minute so we can look at it a little bit more comfortable. And you could see here how this stock pulled back, and it hit a low of $68. And when I mentioned it, let's go ahead and look at what date it was. I went ahead and mentioned this on the 21st, and right there is charge point. I've talked about this one several times, so I left it there. But charge point has been another one of our great opportunities since the 21st. But NextEra Energy, I wanted it to get closer to $60. That was me being greedy, but anything close to 70, 68 was a steal on this one, okay? And this stock did a stock split back in October. Okay, and it was getting back to pre-split numbers. That's what was making it even more interesting, because we may not see those numbers again. So when I mentioned it on March 21st, right, it had actually gone downwards, right? It was this weekend right here, sitting close to $72 and some change, right? And then it dipped, right, on the 22nd, down to $70 and some change. We never saw it touch that again. Bounced back up, came back down to 71, and since 71, it's been shooting up, okay? Just going down, up and down, up and down. This is a company I suggest doing your research on, and its peak here after the split was $87. So it's $10 away from its highest point. I believe this has room to even break through that. Now, it's going to take time. It's not going to happen overnight, but this stock has been hitting newer lows, newer highs, newer lows, newer highs. This is a tremendous company, huge company, and institutional ownership is big. I'm talking about close to the trillions, okay? Think about that on how much they own. They own large amounts of this company. It's huge. Like, you look up how much Vanguard owns, and it's like hundreds of billions of dollars. And it's like, when you look it up on Google, it does 0.0 something something trillion. Like, they're basically telling you, like, they got a lot. They got a lot. The value is a lot. But you can also see too how their revenue has become smaller, but not because of their business model, but because I think of innovation, right? They're reinvesting that net income. So they're still profitable, and they're reinvesting the money for innovation. I mean, big things. And when you actually zoom out and you look at this from the one day, you know, this has been a growing company all its time. Like, really think about it. It's a huge deal, and you're going to be able to own a piece of it. It's pretty cool. But this isn't something that's going to get you rich overnight. We always focus here on Invest for Tomorrow, maximizing profits, minimizing losses, and focusing in on opportunities. So if you feel like you missed this one because you didn't catch it at $70, it's all right. You can watch it for a pullback. And if you feel like this is not for you, that's cool. I'm not here to tell you to buy, sell, or hold any positions, but I am here to enlighten you And at the end of the day, if this pulls back or just continues going up or kind of sits sideways for a little bit, this stock will be higher than where we see it today. Just look at that 1-day chart, okay? Once upon a time, these were the present days, and I would always say this, and I'm saying it right now. Today's prices are cheaper than tomorrow's, and this is a good chart to go ahead and show you that true statement. These days were once today, and those today's prices were cheaper than tomorrow's, and tomorrow is right here, the bigger picture. As always, guys, thank you guys so much for watching, and let's make some money.